Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number over here. If you pick up the phone and give us a call, leave me a message because I'm not picking up. I'm busy, and no, that's not it. It's just that during the show, what we try to do is have anybody who has a question call on the phone, and I'll give them a call later. Reason is that there's so much content, so much going on in the show that answering this is not. And what's the guy's name, Daryl? The guy that just does question and answer radio all the time. He's a very popular guy. Dave, I forget.
Dave Ramsey.
Yes, yeah, Dave Ramsey. But that's his format, right? All he does is he proposes a topic or whatever he's talking about, and then just people call in. So the whole show, and his delivery is kind of a lot different than mine, but his whole show is about answering questions, whether it be about retirement, whether it be about investing, whether it be about mortgages or banking or anything financial. That's what he does. But that's all he does. He doesn't prepare upfront anything. He doesn't really do interviews, which is a different style of show. But for our show, that's why we ask you, write down the phone number, 888-713-2929. If you have a question, write it down. Call me. I will definitely get back to you. As I said, the experts on the show, the 3 or 4 people each week that come on the show, as well as our particular 2 segments, we try to delve into many, many aspects of what makes mortgage lending an interesting profession, but also the information that you're going to need in order to make a decision. Buy, sell, you want to buy now, you want to get the rate that you want, what kind of programs. We deal with that because we talk with lenders, we talk with loan officers, we talk with escrow agents, inspectors, all kinds of people who are in the business. There are a lot of different lenders out there. There's probably over 1,000 different lenders out there, whether they be mortgage bankers, mortgage brokers, or banks themselves. There are many, many different types of programs out there, and all of these choices that you're going to have to take a look at if you're looking at either investing or you're looking at a primary residence are choices that you have to make. And in order to do that, you have to get the facts in front of you. And that's what we try to do each and every week. Sometimes we're successful, sometimes we're not, but we're always trying to be lively and bring you information. Some of the things in the News to Use section, which we used to do all the time when Arby was our partner on the radio. This is going back 3 or 4 years, the mortgage doctor. He's now on his own and doing quite well. However, in the News to Use section, did anyone notice Paul Volcker died? Did you see that, Daryl?
I did notice that, yes.
Okay, Paul Volcker. Now, for anybody who's new to, I guess, the economy or economic news, you all know who Ben Bernanke was. You all know who the current Fed Chairman Jerome Powell is. Paul Volcker was a stalwart in the fight against inflation. Now, most people nowadays look at inflation as something that the milk has gone up in price or the gas prices go up again. That is inflation, but they limit what they call the core inflation rate to a certain specific set of facts. Those set of facts and how they're governed determine exactly how the Fed either raises or lowers its rate. The Fed, its mandate since Volcker has been to curb inflation. At his time, and this was during Nixon's White House, right? Nixon, Carter, Reagan. These times where we had inflation. Remember what the inflation rate was back there?
It was double digit.
Yeah. 18% for a while, which was unbelievable. Imagine that. Imagine buying a car this year for $1,000. Next year it's going to cost you $1,200. That's inflation. And in order to curb that, what they figured out was they needed to raise the interest rates. Now, this is counterintuitive to what you might think, right? If rates are going up and if costs of things are going up, you really should be lowering prices. But no, the fix for it was raising the Fed interest rate. Now, the Fed interest rate is what they lend overnight to banks and member institutions around the country. Usually there's the big five, what they call now the institutionally, what do they call it? The institutionally incapable of folding company. I think there's 5 or 6 of them, meaning that if they went bankrupt or out of business, the country was in trouble. And they narrowed it down to these 5 or 6, and they have to have a certain amount of, I guess, liquid assets on hand at any given time. And that particular rule is held strict since the mortgage crash in 2008. Anyway, so we're getting into Paul Volcker and what he did and how he helped the country by basically curbing inflation, the low, extra low inflation that we see today and that we even take for granted. We don't even realize inflation is out there. Certainly, the only inflation we really want to see is an inflation in your paycheck, i.e. you get $100 a week. Now, wouldn't it be nice next week we got $110? Well, that would be, inflating 10% on your paycheck. Now, that kind of inflation we want. Why? Because more money means more mortgages, and the mortgage rates are great. We just talked to a client yesterday about a VA loan that he is getting at 3.375%. Now, that is an unbelievable rate in any market, and in this particular market, it has got to be one of the lowest rates we've seen in the last 10 years. And I mean, we've seen some low rates, believe me, but in this particular market right now, 3.375 is a smoking interest rate. And part of the reason that we can offer these kind of rates is because, and we've talked about it again on the show, what happens when the Fed, the Treasury, and the general market in particular makes money so free that we kind of get hooked on it. Can you imagine paying 7% interest rate on your mortgage? No way. Nobody would do that. Well, we've become so accustomed to these super low interest rates. And by the way, it's on the back of the taxpayer either today or in the future. We just looked at some of the figures from the Office of Management and Budget. The fiscal year 2020-2021, the budget is being prepared and about ready to come out to have people take a look at it. They're looking at $1 trillion. $1 trillion. I can't even imagine what that is. Every year for the foreseeable future added to the debt. That's what the free money is. Do you understand? So if interest rates are artificially held at, let's look at the VA rate, 3.375 or 3.325, I'm sorry. That's held there because the government continues to borrow money it doesn't have on the future generations. That keeps the interest rates artificially low. It's as in this scenario that I was talking about, Paul Volcker and what he did for the economy. The same article talks about this particular way of adding so much liquidity or free money into the market. It's like crack to a crack addict or heroin to a heroin addict. I mean, it is like the type of thing where you cannot wean yourself off it. So we've got some interesting choices to make as a country and how we move forward. I just looked again on online. We go to a number of sites for the show. There was I'm trying to think how many billions of dollars we just spent on a brand new aircraft carrier. Do you have any idea what an aircraft carrier costs?
Oh, it's got to be
yeah, exactly.
half $1 billion.
Oh, easy. I think it's more like 10 billion. I mean, if the new stadium in Los Angeles is 2.5 to 3 billion.
Yeah, and it doesn't float.
No, and it doesn't float, and there's no fancy guns, and there's not 7,000 people working on it. No, it's about $10 billion on an aircraft carrier, okay? And I looked it up. The United States has 11 aircraft carriers. The rest of the world combined, 9. So do we need 11? Anyway, when I look at the way things are spent, the budget for the U.S. military, the budget for any number of things federal, and yet what we have is free money being printed and borrowed against the future of our kids while we have super low interest rates. And I bring all this up because Paul Volcker's world, he was able to reduce the inflation, to make money mean something, to make the U.S. dollar mean something. Well, can we say that that same U.S. dollar is in the same safe hands that we put it in when Volcker was trying to lower inflation.
If you want to buy an aircraft carrier, it'll cost you $13 billion.
Thank you very $13 billion. I
We
was
need
wrong.
Dr. Evil to say that. $13
Oh my
billion
gosh, it's just too much. Anyway, I'm Jeff Barton, your host and your leader here for the show. I don't know what all that meant, except that some of the things that we do each and every day are reflected in, our own purses and how we have to budget. I just wish the federal government would get behind that. And I just think the country would be a lot safer if we were a lot more economically sound in terms of our financial choices. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number over here. Write it down, save it. Have your questions, call me later. Why? Because I'm busy right now. No, I'm just kidding. That's the same joke I used about 10 minutes ago. Anyway, I'm Jeff Barton. Thanks for calling in. We are going to give you some answers today to some issues, problems, programs, things you might have not thought about in the mortgage business. We do talk about mortgages exclusively on the show. We do talk some real estate, a little bit of economics, obviously. They all are wrapped into your decisions about what you're trying to do if you want to buy a house. And you're just, there's so much that you have to do each and every day. We're going to try to make this process a little bit easier by providing you with great information. One of the people that has been on the show many, many times, but also who has that same level of expertise and information is April Lopez from Nations Direct, and she joins us again today. Hi, April.
Hi, Jeff Barton.
Hi, how are you?
I'm great. Thank you for having me on the show again.
Thank you very much for coming on the show. We've been doing this show probably off and on for the last 5.5, 6 years. And each market, each time of the year has a little bit different or sometimes a lot different things or programs going on. Give us your idea of what's a terrific program that Nations might be offering today for some of these beleaguered borrowers who are looking to purchase in this market.
So, right now, Jeff, we are very excited. We're offering mortgages now for your clients that make great money. They're self-employed, but they don't necessarily write it all on their tax returns. And those buyers who would try to go traditional would get turned down because they couldn't income qualify. So we call these loans non-qualified mortgages, in which they can provide alternative documentation to validate their income. And so the product that we do mostly is this 12-month bank statement product, which has been amazing.
Okay.
And the rates are very competitive. So yes, your rate's going to be slightly higher, but now we're finding about 40% of the self-employed borrowers these days are needing alternative documentation to qualify for income.
Now, these types of loans, these loans are not sold to the government-backed Fannie Mae, Freddie Mac, or Ginnie Mae, right? These are other loans that are sold to hedge funds, Wall Street, insurance funds, things like that, right?
That is correct. You've got Morgan Stanley, you've
Right.
got Goldman Sachs, you've got a whole list of people that want to buy these.
Yeah, and the attractive nature of them is because the interest rates are a little bit better. They're not even that much off what a prime rate would be with a Fannie Mae loan, right? I mean, if you're comparing apples to apples.
Not at all. And we're finding that the buyers also have a higher average credit score,
Yep.
and they're less likely to default because they're also putting as low as 10% down on this product.
That's interesting that you say that. I know I was looking at some of the FICO scores for government purchased loans versus what's out there in the non-QM space. Talk a little bit about that and what type of borrower you're looking for these type of loans.
So we're looking for borrowers. Believe it or not, we will take a borrower with a FICO score, a credit score as low as 620. But what we're finding in the industry is most of these buyers, they're great credit users, and their average credit score is probably right around 700,
Right.
believe it or not.
Right.
And they can do as little as 10% down, and with 20% down, that 20% down payment can be all gift.
That's interesting. So explain a little bit about the gift and how the gift works. I know in traditional or conventional loans it might be a little bit different, but tell us how it works in the non-QM world.
Well, in the non-QM world, if a buyer is purchasing and they want to bring in a 20% down payment, we look at that as a substantial down payment, and we are going to say, listen, we know sometimes your mom and dad might be moving in with you, but they're not going to be on the loan, but they're going to be the ones that give you the gift for the down payment. We'll allow that mom, dad, any immediate family member, we'll allow them to gift the down payment on a 20% down all. Now, if they wanted to go 10% down payment, we just require the buyer to have a minimum contribution of 5% of their own funds.
So if we're talking about a $500,000 loan, and mom and dad want to come in with 10%, that'd be $50,000, and then 5% would be $25,000 from the borrower. So essentially, the contribution would be about $75,000 for that type of loan. Just as an example.
Absolutely.
Okay, that seems, and there are a lot of people out there in the world of, let's say, I don't know, they have a business, they're making a lot of money, but as you said, they are writing a number of items off on their taxes, so their taxes may not show the exact income. And these bank statements, they are 12 months, 24 months, I forgot what you said.
So it's 12 months. We tried to make it simple. What we found also with 24-month bank statements is that the most recent of the 12 of the 24 may be slightly declining, and then we put that buyer through all that trouble of providing 24 months, when in the end, we're really averaging the most recent 12 months.
Right.
So we've made it a little bit simpler for the buyer. So.
Okay, tell us, how is the market? What do you foresee for the next 30 days to 90 days? I know the Federal Open Market Committee meeting did not raise the short-term rate, and so it looks as if they're thinking the economy is doing okay and inflation is a little bit in check. What are your prognostications as to where we're looking for in programs and rates coming through to the next year, 2020?
They're just going to be stable. I don't think there's going to be any large fluctuation, a quarter here, a quarter there.
Mm-hmm.
With the election coming up,
right.
There really hasn't been any volatility. We saw it this week that the rates, could be volatile the day before yesterday,
Yep.
but they actually opened conservatively and then they adjusted. So I would say stable, unless some unforeseen thing comes up. I don't see any, price increases, but the inventory is still really low, so we've got to keep it competitive.
I agree with you. And do you see that there's more purchase than refi, or are you still seeing a lot of refinance business come through because the rates did drop from a year ago?
Yes, I'm seeing a ton of cash-out refis.
I see.
I would say it's 50-50. I mean, we're still in a purchase market, but because the inventory is low, these poor buyers are getting outbidded and therefore putting in multiple offers on multiple homes to try to get into a house.
Right, that's interesting. In some parts of the country, because the company Malibu Funding, who sponsors the show, they're in a number of different states all over the country. In some parts of the country, there is an excess of inventory, not an excess, but at least more than there is here in SoCal. And you're saying, because obviously you have your finger on the pulse, that inventory is still pretty tight here.
Very tight here. We're seeing that, the market's been stable. I think the sales this month decreased by only 0.1%.
Right.
But the using a Ventura County statistic, I believe I was talking to an agent, and he said they were down about 200 sales just from last month in the Ventura County, Simi Valley area. So yeah, it's definitely low still here in California.
Wow, I had no idea. All right, the holidays are coming up. Do you see the slowdown in the business as we usually do, or do you think we're going to stay strong through it? I'm a little bit mixed because I know, when you run a race, you're kind of tired at the end, and I figured since the rates dropped really halfway through the year to a time where everybody was sprinting because there was so much business, I don't know if people are exhausted and taking time off, taking a vacation. How about yourself?
Well, I think it slowed down in December. Last
Right.
month, November, was crazy busy.
Yes, it was.
Historically is not the case. But I think that we're going to get charged up after the holidays. I agree with you. Both Thanksgiving and Christmas fell at the end of the calendar month, and so it's creating 3 additional days off for Christmas, as I see it with most businesses.
I see.
So
Yeah.
hopefully everyone will be recharged for January, but I think still stable, but it did slow down this month.
Yeah, I agree. I think it did slow down. I think there are opportunities always at this time of year for people who are savvy enough to hang in there and go out and see properties that maybe some other people aren't seeing, just because it is that time of year where you're spending more time shopping or at home or with the family, and your frenzied life is not allowing you to get out there and see. So I think there are some opportunities out there. Certainly the mortgage market and the interest rate is still pretty good.
Absolutely. I'm still seeing government loans on streamlined refinances as low as 2.99 still today.
Wow.
Pretty crazy.
Yeah, that's pretty crazy. April, thanks for coming on the show once again. Great information about the non-QM stuff. Thanks a lot.
My pleasure. Have a great day.
Bye. That's April Lopez from Nations Direct. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. If you want to reach us by email, info@malibufunding.net. We are on YouTube. Go to Jeff Barton, the Mortgage Voice on the YouTube. And on the YouTube. Is that how they say it? How do they say it?
That's the way the Beverly Hillbillies say it.
Yeah, on the internet, on the World Wide Web.
With the cement pond.
Exactly. Anyway, we are on there, The Mortgage Voice. This particular show today, as well as many, many others, the Las Vegas Real Estate Show and a number of other things are on that channel. And you can pick past shows, interesting tidbits and information from the guests on the show, as well as solid information about loan programs, about different ways by which you can qualify for a mortgage. How do you do certain things in order to get a mortgage? All of these things are on that particular YouTube channel. So I am very happy to announce that the rates are really good. Yeah, that's a big announcement to everybody out there. If you are listening and you haven't really picked up rates this week, let me just tell you a little bit about the 30-year fixed rate at 3.75 to 3.875. Now, we've been below 4% for about, I want to say, 4 months. Now, we were heading towards 5% at the beginning of last year, and now we are not. And the reason for that is, it's manyfold. But one of the things that the economy has done is really confounded many experts. We have terrific unemployment numbers in each and every week. I think last month we had more people hired than we did in June, which is kind of unusual. Now, granted, there are seasonal hires, but usually not until December. But in November, we did see some, I think it was 360,000 new jobs in the economy. Now, it's pretty spectacular. We're dealing with 3.5% unemployment rate, and if you're looking for a job right now, and I know because I have 3 children, and all of them are looking for jobs. They're out of school, and they're out there in the economy. I know that all jobs aren't equal, and a job that you're working temporary, or my son who works in the food industry, who is also a political science guy who's stumping for a couple of political candidates up in the state of Oregon. My other son who's in the gaming world, yes, he's trying that mightily, got laid off from one company and rehired from another company. So that'll tell you the extent of what that is. And, of course, my daughter, who is a writer, is trying to break into that particular field. Yes, if you're out there and you're looking for a job, you can find a job, but is it the job of choice that you're looking for? I know that when you grew up, this didn't happen when I grew up, but when you grew up out there and you're younger, everyone said, you're great, you're doing terrific, you can do anything you want if you just apply yourself, or you deserve this. This is the mindset of the way I raised my kids, right? In a positive environment, trying to make them as good as they can be. Well, the backfire of that in some ways is the fact that a lot of kids who are getting out of college are disillusioned with the fact that, you know what? You can't get what you want right now. You can't go out there into the job market and demand a salary and a position and a title immediately upon graduation. Now, all 3 of my children got college degrees. I never got a college degree, but that doesn't mean anything in terms of today's market. In the 60s, when I got out of college, that was, you could basically write your own ticket. In the United States at that time, we were going through one of the biggest expansions in our economy since, the end of World War II. And we're talking about from 1945 to 1965, the economy in the country really boomed. Well, we don't have that particular type of booming economy now. What we have is an economy that's based in large part in the services industries, where the economy is growing jobs the most. However, if you get out with a medical degree, anything in the medical field, if you go out with a computer science degree, if you get out of college with an economics or an MBA, anything that is business related, yes, all these fields, you could certainly find some work. But a lot of kids don't come out of college like that. They come out with French lit majors, or they're political science majors, or they're writers like my daughter is. So I understand it's difficult. You're young. You're getting out there. You want to get a job. So I looked at this very interesting article, and it talked about millennials. Now, I know the younger kids, some of them, my 25 and 26-year-old, yeah, they're millennials. My younger daughter is in a different generation in terms of however they classify them. But it talks about millennials and their spending habits and how millennials spend more on certain things than, let's say, the baby boomers or Gen X. I want to bring Daryl in here and ask him if he can guess what millennials like to spend their money on more than, say, us in the baby boomer generation.
Entertainment.
Let's see. No. Well, okay. You say entertainment, so this particular thing, gambling, would come in terms of entertainment.
It could.
Yes,
Yeah,
right?
some people do it for entertainment.
Yes,
Other people do it because, they have a desire to get the pot at the end of the rainbow.
Well, so 5% of the millennials spend on this entertainment source,
Okay.
whereas the boomers only 4%, and the other generation's a lot less. So
Well, I think
millennials are spending more.
Yeah, the boomers probably on the tail end probably saw harder times.
Well, I think that, and plus, most of my friends who are over 65, they just don't have it to go out there and spend it. You're on a fixed income. You're not gambling $100 a week on the football pool.
No.
No, exactly. Some of the two other things that go along with gambling and
Sex.
no, but that's close. Alcohol,
drinking. Yeah.
Oh, drinking. 11%. 11% spend a lot more money on drinking than let's say the 7% who spend money on drinking in the baby boomer
Yeah,
generation.
the last time I was in Las Vegas, walking down the Strip,
Right.
I felt old
Oh,
because
you know it.
I was not drinking.
Right.
I was walking into other people's spilled drinks, but not my own. And I felt old because I was probably one of the oldest dudes there.
Right.
That whole thing has turned into 25 to 30-year-olds.
Absolutely. Well, it's interesting because you don't see this particular group of people saving for down payments on houses the way you did in other generations. I guess that's what I'm sort of getting to here, is that this particular generation wants to have a good time. They're not particularly interested in buying houses the way past generations were in terms of percentages. Sure, there are many of them, and it's a huge market, by the way. The millennials are the biggest market in the country right now, bigger than the baby boomers.
One of the reasons being, is the job market is not committing to them for a long-term employment arrangement.
Right.
And
Right.
if they
That's
buy
right.
a house and their job situation changes, they're going to have to potentially sell it, move, whatever
Right.
the case may be.
Right.
And, it's no longer a career opportunity with a company. Come join us for, the next 20, 30 years, right?
Well, I think this particular group, they got caught between the old way that jobs that were gotten and the new way with the new economy based on technology, the internet, obviously high-tech jobs. They're kind of in that middle ground, whereby some of them, if they were born at a certain time, they're used to an older way of doing business. They like answering the phone, but anybody who is born in the newer side of the millennial era, no, they're not necessarily doing this. So they're caught between and not quite sure so they're out to have a good time.
Yeah, my brother is in the high-tech business, and he found himself in the marketplace looking for another job, but he had been with the company for 20 years, and they wanted to know what was the matter with him.
Right.
That
Right.
he had spent so much time at that company.
That's it. That's
yeah,
excellent.
you weren't upwardly mobile. You didn't look. How come you didn't trade up and go to better places?
What
he says,
is
I was
that?
fine. I was happy. I was comfortable.
Right, exactly. And I think that particular mentality is certainly a boomer mentality. So, do you know the phrase, okay, boomer? Have you heard it?
That one I've not heard.
Okay. So, old guys like me.
Calm the old folks
like
down.
you. Yeah,
Yeah.
exactly. You know, that pontificate and lecture. Millennials or younger generations, they give it the okay boomer, meaning that we can be dismissed very easily. I actually laughed when my son told me that. I had never heard that before.
Yeah. We don't want to. They don't want to hear the whole story.
Exactly, again.
Yeah.
Anyway, thanks, Daryl, for jumping in. I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number over here. If you pick up the phone and give us a call, we really greatly appreciate it. We're going to help you get a mortgage today. We got a lot of great people on the show that you may have heard or that you will be hearing. KCAA, KMET, and K-Tahoe are our terrific stations who bring this particular broadcast to you. And we've gone local. We have one of the best loan officers in the Inland Empire on the show. He's been on the show several times before. George Gonzalez joins us now from Malibu Funding. George, how are you?
Hey, I'm doing excellent, Jeff. Thanks for asking.
Thank you, and thanks for coming on the show. Okay, give us a scenario. What's happening in the mortgage world? What are some of the great programs that you're offering?
Some of the great programs that are out right now, as you know, is a lot of these new loans that are coming out are for the self-employed buyers who, basically, if they don't claim the right amount on their taxes, they're just using what we call bank deposits, which one of my biggest programs for self-employed is what they do is they average the 12 months or 24-month deposits, and that'll give us the income that they get to use to qualify.
That's interesting. Now, the justification for that is what? That they, if they showed you the taxes, it wouldn't necessarily be reflective of what they actually make?
That is correct. Basically what it is for some reason, they're not claiming enough to qualify on taxes because of the write-offs that they have for their business. However, the banks, some of these banks are saying, that's okay, we'll just use your business bank statements and just average your deposits for the last 12 months, and that's the income that they give you to qualify for the new house.
How many people are we talking about here in this boat? I mean, it sounds like because they're coming out with these kind of programs, they're looking at, I don't know, many, many people who could qualify under this scenario. Is that what you're seeing too?
Yes, sir. Like, they have, let's say, for instance, we have a guy who owns his own business, and he pays himself a W-2. However, the W-2 doesn't fit him enough to qualify for the house he's trying to get.
Right.
So then we're going to have to see what his business, he brings in both of them, the business deposits and then plus the W-2 that he pays himself, and then that's how he can qualify on double ending those.
I see. And so basically the income is really the key here, and proving income got a little bit easier because they're allowing, what was that? Sheesh. George?
Oh, I'm sorry. I was getting a text message during the call. Sorry about that.
Nah, no problem. That sounded like the London Horn, from Big Ben. That was pretty good. So on these programs, George, how many people do you currently have? I'm just curious, only because I know that certain sections of the country really rely upon these types of programs, where other, portions of the country maybe have a lot of W-2 because there are factories or there are a lot of big businesses, maybe offices. Do you find a lot of people in the Inland Empire taking advantage of this?
Of the W-2 programs?
No, or the program for bank statement programs.
Oh yeah, that's the big thing is right now. Basically, what it like for instance, I have a client right now who I just pre-approved, who he has his personal job that he makes a W-2, gets paid, and then he has a side job from a company that pays him on his days off to do some extra research, and it's 1099. So what we did was, the way we submitted it is, the bank lets us use both incomes as long as we have 2 years of him with the 1099. So they actually let him qualify a little bit more because he also gets to use the 1099 on top of his W-2.
Do they give him the full amount of the 1099, or is that or is it less?
It's off of his taxes, what he nets
I see.
on his taxes, the net income off of his taxes.
I see. And in these type of programs, George, what are we talking about in terms of rates that people get charged? Is it similar to what it would be in a conventional situation, or what is it?
Well, yeah, see, for this instance, because he's getting qualified W-2, he's getting the best that's available for, regular loans, even with his 1099. Now, if somebody else just comes in, like the other people I have pre-approved that are using their bank statements, now that's a different story. Because they don't ask for taxes, they just use your bank statements, the interest rates start a little bit higher, depending on the credit score, but I'll say, for example, it would be in the mid fours to high fours, so about a point and a half higher than what the ongoing rate is going if you have a W-2 job.
I see. Well, in this market where we're looking at rates at 3.75, so you're almost talking at 4.75 to 5%. Is that right? Something like that?
Yes, that'll be exact. It's about if it was the W-2, then obviously it's about a 3.75, and then it goes up a little higher depending on your credit score.
I see. And the credit scores themselves, you deal with a lot of borrowers. What is the average credit score you're seeing coming in from your borrowers today?
We're looking at from anywhere from 680 to about 720 is the average.
And now you've been in business for many years, 20 years, let's say. How does this compare to other markets in past years? Is this better then? It sounds like that's a pretty good FICO score. I remember back in the day, 620 would get you almost anything. But what's it compare like?
Well, the difference is, the FHA and conventional. The conventional, you got to have at least a 680 to get a decent rate.
I see.
If you're down at a 620, then you'll probably be better off going with the FHA rate along with the MIP, because the rate will be less, but you'll have an MIP payment, so it'll still be a little bit less. Like, let's say, for instance, FHA would be, let's say, a 3.75 on the rate, but then you have the MIP.
Right.
Compared to somebody trying to get a conventional at a 620, you're looking at a 5% rate. So
I see.
It just depends on, there's a lot of factors. The loan amount makes a difference, how high the loan amount is. Because if it's a bigger loan amount, then every little change on the interest rate is going to make a difference.
Right.
If it's a small loan amount, then you can probably, play with the rate, and it's not going to make that much a difference on the payment because the loan amount's small.
Now, do you foresee, because I foresee that the rates are probably going to remain very steady through the election. Do you see that too?
Oh, yeah. Matter of fact, yesterday when they voted, I guess the Fed decided to leave the rates at, where they're at, not raise them. And so, all of a sudden, we got some good, emails from banks and new follow-ups saying, hey, we're going to keep our rates where they're at. And the buying, the houses are still kind of going up a little, but the best thing is, like I said, was the interest rates are staying straight where they're at. So that's what's good.
That's interesting. Okay, so the inventory in your area, say that the cost of the houses are going up. What is the availability of product? Is it still difficult to find a property, or are there more properties? What's it like out there?
Yeah, so right now, this is, the holiday seasons, November, December, Thanksgiving, Christmas, and whatnot. There's more inventory right now. However, I'm getting a lot of calls for people to get pre-approved, which they want to start as soon as the holidays are over,
right.
January, February-ish. So, but there's some people who are wanting to get their house before Christmas, but it's kind of hard because the sellers aren't really motivated because maybe they want to spend their last day in Christmas for their last time in this house, or however it might be. So there are some inventories out there, but just the responses are pretty slow because a lot of people take vacation also around this time.
Yeah, I agree. And I think in our business, in the mortgage and the real estate world, what we've found is there are a lot of companies, agents, people who work the business who have been so busy the last 6 to 8 months that maybe taking a little time off from that standpoint is probably what's happening all as well this year with the slowdown, because I've noticed a bit of a slowdown in December.
That is correct. And like I said, most of them are just getting prepared. Like I said, I'm getting a lot of leads, but they're not, and I'm asking them, to give me the stuff we need to get them going. But a lot of them are, okay, I will, but they're obviously it's because of the month. It's the holiday that's slowing them down.
Yeah, I think so too. I think this year we're going to see a more extended holiday period. The way the holidays fall too. So do people go to work after or between the holidays? Maybe not so much, and maybe there'll be a bit more of a slowdown before we gear up for January. Hey, George, thanks for coming on the show, helping us out. Could you shout out your phone number for people who are looking for a great loan officer out there in the IE?
Yeah, my direct number is 909-900-9565.
Great. Thank you very much. Thanks, George, for coming on the show.
Thank you, Jeff.
Okay, and that's George Gonzalez from Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. Email is info@malibufunding.net, bartonblog.com or .net. Either one of those things you can reach me. And at Jeff6493 is my Twitter feed, although I haven't really been on Twitter. I used to do a mortgage minute about once a week. And I got a lot of great feedback, but I've been so busy. Daryl, you've been busy this year at this time of the year?
It seems like I'm a duck, on the top of the water calm, but underneath paddling like hell.
I had someone the other day said they dressed like Donald Duck. I didn't know what it was. I'm doing this EMT class, as I said, right? It's just, so the teacher said that he showed up at a call and a guy was dressed like Donald Duck. And everybody's like, well, what do you mean, Donald Duck? He said, only a shirt on. So I was like, okay.
Oh, no.
Very well. Anyway, I'm very busy this year. There's a lot going on. We're producing shows. We're doing a lot in the mortgage business, although it's slowed down a little bit. Plus, I have a great deal of family at home doing this course. There just seems to be a lot going on for me personally, and that's led to, a number of, senior moments is what I would call them. Just lapses in memory and what I'm supposed to be doing.
Or temporarily misplace a name?
I'll always misplace a name. Are you kidding me? But my wife is in similar circumstance, but she at this time of year, and the reason I bring all this up is because there is a certain thing about this time of year which brings fatigue to many, many different people. And if you're out there and you're shopping for a house, at the same time all this is going on, the stress level within you and your family is going to escalate. It's going to escalate anyway because you're expected to be the perfect mom, the perfect Santa Claus, the perfect, deliverer of food, and you have to give to the needy. I mean, all these things playing upon your emotions, plus the actual physical job of doing something. So, add on top of that, you want to move, or you want to sell, or you're looking to get a real estate mortgage, a mortgage that is, something that's difficult. During the show today, I've received 2 different texts from people who are either upset about their closing costs or need to speak to me because, it's just extremely important. Well, yes, there are many, many things that contribute to stress in the mortgage industry, but this time of year, even more so because of the added things that you have to go through. For an example, there are many schools that hold these winter pageants. They don't want to call them Christmas pageants anymore, whatever they're called, holiday things that they do at school. So you're expected to show up. You're expected to, as a family, go and see the holiday play or the presentation, and all the teachers and all the administrators. There's a lot of angst in terms of that. Plus, everybody's got their hand out. Whether it's the principal, whether it's the person that you take your shoes to get fixed, whether it's the UPS person that delivers packages, or I guess nowadays it's more Amazon than anything else. Everybody has got some handout. They're looking for something from you. So the stresses in there are unbelievable, especially with all the school and the kids and the moving. And so take a deep breath. We often talk to Dr. Bertelli on the show about how to get through these difficult situations. And she always tells us to focus on the immediate and try to experience what's happening now rather than futurize the problems that are going to occur if the cookies don't get made, which is what happens in our house. We usually hand out 25, 30 different tins of cookies to people. Now, we've been doing this for 20, 25 years. I think people have moved from the houses we deliver them to, and the new person is now expecting them. We don't even know who they are. We think it's the old person, but it's really not. It's just this new person. I've got cookies. So take a moment, take a breath, think about spring in your new house, because I think real estate prices are going to continue to stabilize. Yes, they're going to go up 3 to 5% each year, but not to the 6 to 10% they were going up. And in the Inland Empire, San Bernardino and Riverside counties, those places where you're longing to look for the home you want to live in many of the great communities out there, you'll find it. And the interest rates, in my opinion, and most of the guests on the show today, think that the interest rates will remain the same. And the reason for that is that we have had a great deal of economic boom, i.e. a lot of people are working. But at the same time, we've held interest rates incredibly low because of the free money that's being printed by the Fed and by the Treasury. And we talked about this in an earlier segment. But beneficial to you right now in the immediate is that your interest rates on your 30-year fixed rate loan, if that's what you want to get, are going to be pretty low. They're probably going to be below 4% for the next quarter at least. And that's a good thing because it gives you some time to breathe, find the right house, and to be able to make the mortgage preparations you need to make to be able to qualify for that mortgage. And if you can't qualify on a conventional VA, FHA type loan, you can certainly get one of those non-QM loans, and those particular rates are what? Half a point to a point higher? That's about right. There are a lot of different ways that you can get your satisfaction from those particular rates. So let's look at the rates and how they are this week. As I said earlier in the show, 30-year fixed rate loans are 3.75 to 3.85. Really good conventional loans. And these are up to the conforming rates, and conforming rates have gone up. When I say conforming rates, these rates are to the conforming standards of the amount in your particular county. I think in Los Angeles County, they're 675. Maybe in San Bernardino Riverside, they're 5. I don't know. Check. Call me, 888-713-2929. I can give you the exact number. I'll give you George Gonzalez, who's on the show earlier. He's the guy that probably has his ear to the pulse of that a lot more accurately than I do for Ventura and San Bernardino, not Ventura, but San Bernardino and Riverside counties. The FHA VA loan, 3.375. We just, as I said, got a guy into that 2 days ago. He was ecstatic. 15-year fixed rate loan, 3.375, and that's a great rate on a 15-year fix. If you can afford a little bit more, that's a great loan, and you're out in 15 years. I did that loan, and I've really owned my home free and clear for the last 3 years. And the 5-year ARMs, 3.25 to 3.75, and that depends. It depends a lot on you. Excuse me there, I had a little bit of a frog going on. What was that all about? Anyway, so as I said, those are great rates. And if you need that particular rate to get into a house because you can't afford more, there are product out there. You may have to go a little bit further up the 15 or down the 215 in order to afford it, but you can find a place. Now, the NAR forecasts each and every year. There's a guy named Yun, Y-U-N. He's the chief economist for the NAR, and we've talked about him on the show many times. He talks about, the prognostications of the real estate market nationally, globally, locally, and what will sustain the current economic growth or recession. In his remarks recently, Yun said that the most important question being asked by economists out there are, will there be a recession next year? Now, because I talk a lot about borrowed money, somebody's got to pay for it in the future, the national debt, that bothers me, and it is always something that I think is going to hurt the economy in the long run, is this continued need to borrow, depressing interest rates and making the economy at the present time very good. But what's it going to do for our children and our grandchildren? Anyway, Yun is saying that he's worried about whether there's going to be a recession or not. Now, what is a recession? For those people who don't know, it is two straight quarters? Yeah, I think 2 straight or 3 straight quarters.
I believe 3.
3 straight quarters, okay, of negative growth, i.e. if you've got 1.5%, 2% growth per annum, and you now go to a shrinking of the economy by 0.5 point for 3 quarters in a row, that's a recession. And so the question is, are we going to have that? I don't think so, because it's an election year, and the person in the White House currently has a lot of sway over whether interest rates are lowered, whether they're hiked. I know that he's been beating poor Jerome Powell to death about keeping the interest rates where they are. But I don't think negative interest rates. Now, what is a negative interest rate? Let's say you lend money and you don't make money, but you have to pay the person who's borrowing the money. That's what a lot of countries are doing. A lot of interest rates are like that overseas, especially in Japan. Anyway, that's my New Year's little nugget. We'll be here next week. I'm Jeff Barton, your voice in the mortgage industry. Thanks for tuning in. Thanks for listening each and every week, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.